NYCApartmentZone.com. From New York City, this is the NYC Zone Teams Podcast, a show where we discuss everything about New York City real estate and much more. You have questions, we have answers. And now, here are your hosts, John and Nikolai.
All right. Hello, everyone. We are here with Tim Allomong, and he's a real estate attorney, and he's a professional at 1031 exchanges. And we're here with my business partner, John Godby. All right. And myself, Nikolai. John and I, we're your hosts. We're super excited to have Tim on our show. We're going to get into 1031 exchanges today. Tim, tell us, what is in the world 1031 exchange means?
Hey guys, it's good to be here. Thanks for having me, Nick and John. So 1031s, obviously, that's something that we've all heard of. A lot of people have questions on it. Basically, it encompasses real estate that is owned and used as investment. So you're talking about rentals. Even if you have a property that's vacant, but your intent is to use it for an investment, then this is what we're talking about when we discuss 1031s. So it doesn't apply to personal property as it used to, which we've never really kind of cared about in the real estate world, to be honest with you. But it still holds its power with the tax deferral, even after Trump's plan was approved last year.
Okay. Mm-hmm. So if I'm understanding correctly, if you have an investment property, whether it's rental units, whether it's any sort of investment property, you can be qualified for a 1031 exchange.
Correct.
Okay.
So there's what we call safe harbors in the statute and the regulations. The IRS responds to sort of questions that real estate professionals will pose to them, and they'll issue a letter that can be used as guidance. And there's all sorts of letter opinions and advisory opinions, but from all of that literature and law, we take from it what we've concocted and call safe harbor. Okay, so the safe harbor with respect to holding the property as an investment is 2 years. So before you do your 1031 exchange, you want to see how long you've owned your property and used your property, and that's 2 years. Okay. Now that doesn't mean if you buy an investment property, your intent is fully there to use it as an investment property. You go out and you do renovations to it. You even might find a real estate broker to go look for potential tenants. But someone comes along and offers you a great price. And in that case, even if it has only been 6-7 months, then are you going to be able to fall within the safe harbor? No. But does that automatically prevent you from doing a proper 1031 exchange? No, not necessarily. There's no actual hard and fast rule in the IRS code that says you have to own the property for a certain amount of time. It's just a suggestion. It just gives you that power in the event of an audit.
Okay, so it's just a suggestion. There's no exact law that kind of like states that you need it for a certain amount of time.
Correct.
Right. So if I wanted to do a 1031 exchange, essentially, I'm an investor. I get a property. I use that as an investment. I'm not living there. Correct.
Correct.
I use that as an investment, and the rule is you should have it like this for 2 years.
A suggested rule.
A suggested rule.
Right.
For 2 years. Once I had this suggestion rule for 2 years.
Safe harbor.
Right. Just safe harbor. And I sell the place. Then I can use what's called a 1031 exchange. Correct.
Correct.
Okay.
So you sell the place and you put the proceeds into a 1031 exchange fund, more or less. You do that by setting up the 1031 exchange with the qualified intermediary before you close. So your closing attorney will cut all of your net proceeds to your qualified intermediary, who will hold the funds until you go to purchase your next investment property.
Gotcha.
So of course the 1031 exchange rule that you have to hold investment property, when you sell it, you have to also purchase investment property. So the property that you purchase or properties that you purchase, because you can purchase multiple, it has to be used as an investment.
Right.
And the same rule applies with respect to the term of ownership. The 2-year applies for the property that you purchase, otherwise known as the replacement property under the code. That has a safe harbor of owning it for 2 years, and you're outside of the window of scrutiny in the IRS's.
Okay. So let's say I were to buy a place and I lived in it, right?
Mhm.
And then let's say I was suddenly like, you know what? I don't live here anymore, but I want to rent it out. Now it's turned into an investment. I bought something else that I want to make as my primary. Does that rule still stand for something like that?
Yes.
The 2 years. So once I leave, at least for 2 years of being as an investment, and if I sell it, I can still do this 1031.
Right, and it's a beautiful thing to do.
Right.
So you have outgrown your starter
Mhm.
home, and you now want to purchase something bigger.
Right.
You know, hopefully you don't have to sell your starter home to purchase your next one, but you know, we can play fairy tale.
Right.
So you want to use your place as an investment property for 2 years, bam, you're eligible for a 1031 exchange with respect to that property.
It's beautiful.
Yeah.
It's great. I feel like it's a pretty good strategy.
And also on the back end, if you use that for a 1031 exchange and purchase another investment property down the road, after you've rented that out for 2 years, you can move back in and use it as your primary residence.
Really?
without-
So even if you buy another one as an investment, and after having it as an investment property for at least 2 years, you could live in it.
You can live in it after 2 years, and you're safely outside of the safe harbor zone.
Right.
You know, if you moved in it within a year,
Right.
you may trigger an audit, in
Right.
which case it could potentially lead to the IRS finding that you triggered the capital gains.
I'm
Correct.
curious. What happens if, let's say, I have a little multifamily, just 3 units, I live in one and I have another 2, so clearly 2 units are investment property, I live in one, but of course I sell it as the whole thing to somebody else.
Right. So that is still 1031 exchange eligible
Okay.
with respect to 75% of the property.
Okay.
So the 25% that you use as your personal residence, you can still apply, or you can still benefit from Section 121 of the tax code, and obviously that's the code that cuts off the first 250,000 gain if you're a single, and 500 if you're filing jointly as a married couple. So basically, once you go into the exchange, you know, you'll have a little bit more of a fancy closing statement with respect to both portions of the property.
Okay.
So, and you know, it's kind of tough. It depends on what you're going to purchase next.
Yep.
If you want to purchase another multifamily and live in one of the units, I hope that you're going to purchase one with the same 75% investment and 25% personal. Otherwise, the numbers can get tricky. So, you know, you might have to, you know.
And
Who kind of figures that out? I'm sorry. Who figures out the percentage of?
Well, that's why we're blessed in New York City.
Uh-huh.
We have great, fabulous real estate attorneys that
Right.
do that kind of work.
Okay.
Outside of the city, you're dealing with title companies
Okay.
who may be less experienced in these kinds of sophisticated transactions. So you really should potentially team up with a qualified intermediary like mine, who would be able to do something like that for your exchange in, say, Arkansas or Colorado. So, you know, you kind of want to have someone in your team that knows.
Right, of course.
And that's always the case.
okay. And this might sound like a silly question, but figure to ask: if I didn't make any profits of my investment property, I held it for 2 years, the market stayed the same, I'm selling it for the same amount, does it make any sense for me to do 1031 exchange, or there is none?
Well, if you're not triggering a taxable event, then you're really wasting money on paying a qualified intermediary to hold the money.
Okay.
And you're also you're tying your money up.
Okay.
In other words, because once you go into the 1031 exchange, you can't close on your relinquished property, which is the term that we call the property you sell first in a forward exchange. You have that relinquished property, and you know, you've got your 45 days, your 180 days, but not until the 45 days would you be able to get your money back from the qualified intermediary, because at that point, if you haven't identified replacement properties than the exchange is dead.
Okay.
So in other words, once you give your money to the exchanger or the qualified intermediary, you can't get it back very easily.
Gotcha.
Right, and so it's like the QI, which is the qualified intermediary,
Yeah.
right? The QI, it's almost like essentially holding your money in escrow, correct?
Exactly.
Right. So,
Yeah.
so once you sell, so you got a place, okay, you want to do a 1031 exchange now. So once you sell your place and you sign at closing your place, and now you have the money, and the QI now has your money.
Mm-hmm.
What's the next step? There's a rule, right? 45 days.
Right. So the first step is make sure that you and your real estate agent
Mhm.
are talking about, about these steps,
Right,
because
right.
you want to know when are you going to be able to put your contract deposit down on
Mhm.
your next property.
Right.
You're able to take money out of your exchange before the 45 or 180 days to make that contract deposit. It's important to know. But after you close on the sale of your first property, you have 45 days to identify potential replacement properties.
Okay.
Okay. And then you have 180 days, also starting from the date that you close, to purchase those amongst those identified properties.
Gotcha.
You don't have to purchase all of them. You can purchase more than one, but you do have to close on one of the properties that you've already identified.
And so it needs to be officially closed within the 180 days.
Yes.
Since of the closing of your first property.
Correct. It's not 45 days and then 180 days after the 45 days.
Right.
And I remember this little detail. I believe if you had left, let's say, $2 million in mortgage on your previous property, it's a must for you to take out $2 million mortgage on the new properties that you buy, right?
Right. So you want to be careful with debt.
Okay.
Anytime you have a payoff of a mortgage on your relinquished property, say in other words, you're paying off your mortgage $500,000. Then your next property, if you don't replace that debt with the same amount of debt, or you fill it with your own cash, then the relief of that first mortgage could be considered income or a taxable event, which would trigger the capital gains. So, for example, if you've got how much did you say?
Let's say I had $2 million in
A
mortgage.
$2 million mortgage on a $5 million property. You sell it and you pay off your $2 million, and you're left with $3 million. We'll say. Now, your next property, if you just purchase one for $3 million, and you don't replace the $2 million debt in this next property, then you've triggered a taxable event on that $2 million.
Yeah.
So what I would suggest to people in that situation is to buy another property of $5 million or greater, use your $3 million in your capital or in your 1031 exchange, plus an additional $2 million in either financing or your own funds, out-of-pocket funds. But in any event, you would have to spend the amount to make sure that your investment is equal or greater value the second time around.
Okay.
Makes sense. So with the QI, when I identified the properties that I want within my 45 days, I have to let that person know.
Correct.
Okay.
So they'll send you forms, and you really just write out the address on the form and sign it and send it to them. If, for example, you want to change a property that you've already identified, you can do that just as long as you still do it within the 45 days. Once you hit the 45-day mark, what you've identified is locked.
Okay. And the QI could be, I'm assuming in this scenario, as an attorney, right?
Well, here's the thing: is your qualified intermediary cannot be someone you know. It has to have a degree of separation. It cannot be your attorney, it cannot be a family member, it cannot be an accountant or your real estate broker. It's really designed so that you don't have constructive receipt of these funds, because it's supposed to be an investment directly into the market or another piece of investment real estate. So you're meant to be separated from the money at all times. So you want to avoid having someone act as that, and generally you just find someone and a company that specializes in
especially in these types of things,
to do this for
to do
you.
that. Okay.
And usually your attorney or your title
Can bill
company
someone.
can sign, or can find one for you as well.
Right. Okay, great.
Right.
So, with your experience with dealing with 1031s, what do you think are the biggest challenges that a lot of people come across?
The biggest challenge is the debt, understanding how to replace the debt and to avoid a taxable event in terms of financing and avoiding mortgage boot. It's definitely not hard to find properties right now. I think people are kind of at the point now where they're not facing the 45 days and they can't find anything. Generally, we don't see any issues with closing on time, especially if you have been planning all along. I always tell people, wait to close on your sale until you have a good idea of what you're going to buy. And right now, it's pretty easy to do that with the right team.
Right. What kind of suggestions can you give to someone who wants to start doing this? What kind of suggestions can you give for that type of person?
I would say anybody who's thinking about 1031 exchange is definitely find somebody who knows what information to offer you on your specific transaction. For example, if you own a specific type of property in Long Island and you're thinking about doing an exchange, you really need to find someone that's done these before, that will talk to you, that will be available to give you a closing statement and tell you what your estimated taxes will be, how much you'll save by doing a 1031 versus if you did not do a 1031.
Sure.
You want to keep your professional income tax professional close by. Because he or she knows your tax brackets and what other deductions and that you're taking, so they can work with whoever is advising you on the 1031. They can work with you and talk about your impact.
Okay. And with the new tax plan that Trump has put in and anything, have you seen any sort of obstacles or anything that's really big changes?
Not for real estate.
Okay.
No, that just they took out the 1031 exchange applicability to personal property, so business assets like helicopters, private jets, and bulldozers, stuff like that were in the 1031 exchange realm before.
Really?
Yes, even artwork and anything that was an investment.
Really?
It actually.
So it's not just real estate?
No, the 1031 exchange law code was really started in the early 1900s for the benefit of farmers,
right?
For their equipment, and it kind of morphed into this, 21st century sophisticated investment real estate tool.
Right.
But it's very incredibly useful.
I guess I can have a bar or a grocery store or whatever, and I can do a 1031 exchange.
Right, so you can do a 1031 exchange from a bar or grocery store to vacant land. So it doesn't matter what type of property.
Well, learned something new today.
And then you could also identify, let's say, a piece of art if I wanted
Not
to.
now.
Well, not now, but
No, because that wouldn't be kind property.
okay.
So when they had the personal property 1031, it was a little bit more restricted with respect to the term like kind.
Mm-hmm.
If you were going to sell a piece of art, then understandably so, you would have to buy another piece of art.
Okay, so it had to be the same.
But it couldn't be a sculpture or something like that. It was a little bit more hairy with respect to identifying like kind property, but with respect to real estate, everybody asks because they see the term like kind in quotation marks. We've all seen it, right?
Right.
They think there's some sort of legal holy grail associated with this term, but it really means nothing. Real estate is real estate, whether it's a condominium or a co-op or a single family. They can all be exchanged, single family, multifamily, and also across state lines.
What are you seeing what's more popular right now with the type of exchange? Is it multifamily? Is it just
Multifamilies. If we're talking about my practice is
Right.
generally New York City, so largely a lot of investment properties in Brooklyn are multifamily. Townhomes are great to rent out, great investment for New Yorkers. So those are always going to be a huge source of our 1031 exchange market here.
It's interesting.
It is, and the people who really benefit from this exchange in New York City is our landlords. Our landlords love to hear about 1031 exchange. They will come listen to you all day long.
I bet they do.
Yes. So, and I tell all of the real estate agents that I work with is, especially the new ones who are in rentals right now, still starting out, is pitch a 1031 to your landlords. They will see you as someone who is well-versed, sophisticated, and they might, entertain the idea of selling their property. And you as an agent could potentially get 2 commissions.
Right. Right.
On the sale
Right.
and the purchase.
Right. Which makes sense. I feel like that would actually be good advice for a landlord, and to see if they want to entertain an idea like that, because it's kind of true, because we do know a lot of landlords in Brooklyn.
Another one is for an estate.
Yeah.
A lot of times we see an estate seller, and the estate owns the investment property. There's several heirs. Some of them don't want to be a landlord. Some of them want to cash out. Some of them want to keep being a landlord. So it gets tricky. You can do the 1031, but you'll have to speak to a legal advisor on the title and how that applies. But estate sales always a great idea for 1031 exchange if it's investment.
Really, even if it has multiple people attached to it.
Correct.
How would that work exactly?
Well, that's why I say it's a little. I think it would be beyond this, but there's you want to look at the vesting, title ownership, and how is it going to be owned on the flip side, because the way that you own the property now, the relinquished property, it has to be the same name on the replacement property.
Gotcha.
And there's few exceptions to that general rule for an estate or an LLC. For example, if you own a property now and it's an investment in your own name, and you want to sell it to a 1031 exchange, and the next property you want to put into an LLC. Obviously, that's a great idea. Your personal asset liability protection, and you also have the pass-through income. So that is allowable, because if you're a sole member LLC, the IRS treats it as a disregarded entity anyways. So what that means is you can put the next property in an LLC wherein you're the sole member
Of the LLC.
Right. Yes.
So let's say there's 5 people attached to that property. Someone passed away, it's an estate sale, and there's 5 people attached to it. Correct.
5 beneficiaries.
Right, beneficiaries. So essentially, they could create maybe an LLC or maybe a trust, maybe, I don't know, where they can, if they wanted to do a 1031 exchange, everyone can be attached to it versus.
Right. So you want to see how the property is owned first.
Correct.
Right. The deceased may have owned it in an individual name, or they may have owned it in LLC.
Right.
They may have owned it with their spouse who's deceased, and that spouse, So there's a whole host of different
I'm sure you
things
go
that come up.
multiple different ways.
We're given a good cliffhanger. Okay, guys?
Right. So, in other words,
Right.
just call us.
Right.
We can explain.
Right. That makes sense. It's funny because when you're studying for you get your license in real estate,
Right.
and you see all the stuff that can happen in different types of scenarios, it just makes your mind explode. You're just like, what?
And then you enter industry and you see that there's another 100 million variables, and you're like, that was nothing.
It's insane. There's different scenarios that can really happen, who owned the property, who didn't own, and there's different ways to.
Imagine law school.
That's insane. That's insane.
They really give you all the different scenarios, and then in practice, you still see all these different scenarios, but in a practical way. It's it's truly, there's always something different with each exchange. So it's a lot to talk about and a lot to know.
I bet.
So, what would be the best suggestion for somebody that's looking to the 1031 exchange? Should they Google it? What should they do?
I would say if you're in the New York region, then connect with us. We can Nick and John are great at giving you an evaluation of your property, how much you would be putting into the exchange. We could tell you what your potential tax impact would be had you not done an exchange. We're happy to give that kind of one-on-one for New Yorkers here. If you're outside the country, I would reach out to your real estate agent and start the process. And obviously, you're going to want to find a real estate agent that knows about 1031 exchanges.
Right. Which makes sense.
And we have pretty good connection all over the place, so we'll be happy to recommend somebody.
Of course. I think this was great. We learned something new, especially about how it was back in the day with personal items.
Yep.
It's crazy.
Yes, it's fascinating.
And I think everyone who's thinking about investing and trying to avoid paying taxes right now, doing this 1031 exchange, I think it's a great way to build wealth and to essentially grow.
Absolutely, you keep your wealth working for you instead of paying your taxes on your sale of the investment property. You can defer that tax and put that money back into your equity, into your investment, and that's the beautiful thing about it.
Right. I remember entering real estate and I heard this for the first time. I was like, what?
Right.
That's
Sounds catchy. 1031.
But
Sounds
you have
good.
to
What is
remember
it?
it's a deferral. It's not an avoidance. So
Right.
you eventually, theoretically, will pay the tax on the eventual sale of your investment property, and you don't do another 1031 exchange. Or if you were to pass away, and leave your next of kin or your children your property. Also, you have to remember that they will get a step up in basis, so they won't pay the capital gains tax that you would have to pay if you sold it, for example, the day before you die.
Right.
Yeah.
Oh, it's interesting.
And let's say I started with like something really small, and I started growing, and over years, let's say I did 1031 exchanges. Is there a limit? I'm just curious, so you can just keep on going.
You can keep on going forever,
Okay.
as long as you stay within the rule.
Right. As long as you stay within the rule.
That would be a good client, no, for 1031 exchanges.
It's a great way to for a young investor to start purchasing smaller properties, maybe down in Florida, and keep exchanging them until you hit your retirement age, and then as long as you've rented it out for that 2 years, you might have grown your small 1-bedroom condo a couple streets from the beach to a nicer, place on the water by the time you're older.
Right.
And
It makes sense.
it's a great tool.
It is a great tool. Well, I don't have any questions. If you have anything,
No, I think this was phenomenal, actually.
we really do appreciate you coming down here,
Thank
Tim.
you for having
and
me.
I feel like this is very educational because I don't feel like a lot of people are talking about this.
Yeah.
It's kind of like, even if you Google it, it's like,
It's an
Head-scratching.
information overload, really,
Right.
and that's the age we live in. There's an overabundance of information,
There
and
is.
I'll listen to my podcast, and just the other day I heard a podcast that had information about the personal property 1031 exchange, and they didn't mention that it's no longer part of the tax code.
right.
So
So people probably think,
when you Google it, you gotta keep yourself in line with the current
Correct.
1031 exchange news, which
right.
And
podcasts like this is where you get it.
the law is ever changing. I'm sure a year, 2, 5, 10 from now, it's going to be most likely something different.
There's always changes in the law that we follow every day at my firm, and we're always keeping abreast of how to use it, to best benefit everyone and structure these types of deals.
So, Tim, if somebody wanted to reach out to you, what's the best way to do so?
Sure. My firm is here in New York. We are based in Chelsea on 25th and 8th. My name's Tim Allomong. It's Allomong and Associates. And you can reach out on an email, tim@allomonglaw.com.
Perfect. And how do we spell Allomong?
Yeah.
Just in case.
It's ALLOMONG.
Perfect. All right. So thanks so much for passing by.
Thanks,
This is
guys.
another episode from the team. And if you have any questions, you can always reach out to us at our website, our email at zone@compass.com or zone@nyczonteam.com. And until the next one, take care, everyone.
Take care. Bye-bye.
NYC Apartment Zone, NYCApartmentZone.com.